So very, very good morning to all of you once again. It gives me immense pleasure to welcome you to the 44th annual general meeting of Deepak Fertilizers and Petrochemicals Corporation Limited. And on behalf of the board, I thank all of you for making it convenient to participate in this virtual meeting. So before sharing the specific operational details and accomplishments of your company, allow me to briefly touch upon the overall major geopolitical situation, economic and industrial scenarios. So as you are well aware, despite huge volatility in the global economic environment, we had wars and we had various kinds of happenings. However, the Indian economy remained resilient and continued on its trajectory as one of the fastest growing economies in the world. The growth has been supported by strong domestic demand, moderate inflation, and stable interest rates. Those are very good fundamentals that are supporting the growth. During this period, the Indian economy has advanced by a remarkable rate of 7.5% in FY24, versus we know many countries in the world are experiencing minimal or no growth. The key positive trend include a robust manufacturing sector, growth in infrastructure and construction sector, and even a revitalized rural economy, besides record tax collections. So India is set to reach $4 trillion this year, nearly doubling in size over the last decade, and is well on track to become a 5 trillion economy in the coming years. This growth is fueled by substantial infrastructure development that we can see all around, and a focus on Make in India initiatives, which is giving a very strong push for domestic growth. In the recent union budget, the government has allocated an impressive capital expenditure budget of over 10 lakh crores to support the infrastructure development. Now, all of this overall positive scenario in India gives very, very strong and favorable tailwinds to all our three businesses. However, at the micro level, Deepak Fertilizer had a challenging year last year, and where all our diverse three businesses was tested for resilience, and that to all coming at the same time based on the geopolitical situations. However, we navigated these tough times, and leveraging on our 4 decades of industry experience and deep market understanding, we could effectively deal with the situation. So we faced erratic monsoons, we faced geopolitical tensions because of war, short-term aberrations that came in with imports of fertilizer grade ammonium nitrate from Russia because they were not finding other countries taking their product. So India became a good dumping ground. Even cheap imports of our nitric acid downstream, the nitroaromatics, came in very heavily from China. Now, despite all these adversities, our robust strategies and our strong knowledge of the market over the last 4 decades, and our focus on moving from volume to value, that steadfast focus, really helped us. So while the financial performance of FY24 were per se below 23, but if you look at in the context of the strong headwinds we face in all the three businesses during the year, your company reported resilient financial performance, reaffirming its fundamental strengths. So in FY24, our consolidated top line stood at 8,676 crores with an operating EBITDA margin of 15%. Now, if we were to exclude the impact of a one-time subsidy impact that came in and the cost of revamping the new ammonia plant, which initially every plant goes through this kind of a bit of a issue in the beginning. If we keep those two aside, Actually, the operating EBITDA margin otherwise would have been around 18%, which is in line with the earlier years' EBITDA margins, despite all the headwinds from the geopolitical situation, which goes to validate the solid foundation strength that the company enjoys. During FY24, we achieved over 90% design throughput for our newly commissioned Ultra Mega Ammonia project, which will now in a full year deliver almost 5 lakh tons of ammonia for the downstream. Now, after studying all these and considering our robust and consistent financial health and the fundamentals, I am happy to share that ICRA reaffirmed our long-term rating of AA minus with stable outlook and reaffirmed the short-term rating at the best possible, that is A1 plus. Also, CRISIL has assigned the CRISIL A1 plus rating to the commercial papers issued by DFPCL and MAL. So based on the FY24 performance and the continued confidence in our fundamentals, the board has recommended a dividend of 8.5 per equity of 10 each, which represents 85% dividend rate. Now, as far as the key Capex initiatives that we have taken up, I'm happy to share that the Greenfield Ammonia plant established through our step-down subsidiary, PCL, Performance Chemicals, began commercial production in August 23 and has gradually stabilized at its rated capacity. Now, this very successful backward integration will provide a long-term risk mitigation for all our three businesses within the group, because all the three businesses, the key raw material is ammonia. The plant has state-of-the-art technology with lowest energy consumption, low NOx emissions. And so with this reduced dependence on imported ammonia, not only it's going to help us improve our operational efficiencies all through the chain, but we will be better positioned to mitigate the impact of the huge global price volatility that we were seeing in the ammonia prices. The other project the company is working on is a Greenfield TAN project, looking at the huge growing demand for all the downstreams, coal, limestone, cement, infrastructure. And this new project is coming up in Gopalpur, Odisha, strategically closely located to the mining areas and the port. And this is going to add the production capacity of roughly around 3.7 lakh tons per annum. And upon completion, our total overall TAN capacity would rise to around 10 lakh tons per annum. And this will be capable to meet almost 60% of India's needs. And this will somewhere place us, among the world's top 3 as far as the TAN capacities goes for the mining sector. This plant is expected to be commissioned by the second half of FY26. The other that we have taken up is the construction of a brownfield nitric acid project. So we are adding around 3 lakh tons per annum of weak nitric acid and around 1.5 lakh tons of concentrated nitric acid. So this project work has also commenced. These world-scale plants will be again equipped with the state-of-the-art low emission technology. Now here we, as you would have known, a short while ago, we had entered into a 20-year long-term agreement with a specialty chemical company for supplying nitric acid. And so this contract itself will consume almost 60% of our new CNA capacity and will provide a solid base load for the new brownfield expansion project. Now, both these projects are building upon our 4 decades of proven expertise. Whether it is TAN or whether it is nitric acid, we have been in these businesses for the last 40 years. So it brings that solid knowledge about raw material, operational knowledge, safety, health, environment, marketing, customers. And once this fast-paced completion of both the projects come through, your company is poised to boost its revenues in the next 24 months. And that will certainly propel us into new levels of financial performance. Plus, the support of our strategy exercise from volume to value, that will continue. So both put together is going to be something that we're looking forward to. There were also a lot of key strategic initiatives besides the Capex initiatives that we had taken up in FY24. And I'm happy to share some of these major ones. So your company entered into a 15-year LNG contract with the Norwegian giant Equinor at globally linked attractive terms that will commence from the LNG supply will commence from 2026. This risk mitigation strategy will solidify our foundation of the entire value chain, right from now LNG, ammonia, the building block chemical nitric acid, and all the downstreams in terms of fertilizers, mining chemicals, industrial chemicals. So the whole value chain will now be very strong on a very strong footing. Also, we recently entered into a 7-year strategic alliance with Israel's Haifa Group. We all know that it's a renowned multinational specializing in specialty crop nutrients, particularly the water-soluble crop nutrients. The MAL Haifa offerings will support agriculture practices by now specifically addressing water shortage, scarcities, and most important, enhancing the nutrient use efficiency. The nutrient uptake of the plant will be something that will be very strongly helping through these products. And this will align very well with our Prime Minister's dream of more crop per drop. Then in June 2024, NCLT approved the demerger, which I had just talked about. And now, like I said, we are looking at each business housed in a separate corporate entity. And what it is going to do is to make sure that, right from the board to the junior most officer, they will all be focused on that specific business. So that focus will bring a much stronger performance delivery aligned to that business need. The second is that for all the shareholders and investors, the visibility will also further improve as they will see, each business housed in a separate corporate entity. And the third most important is we are also finding a lot of interest emerging from global strategic investors to come into India. And now they are finding it, well aligned with some of our, unique focus businesses. So those aspects are aspects which we will now build upon in the coming years. We continue our focus on ESG initiatives, including we have, launched an online ESG profile platform. And in each of our projects also, we are taking care of NOx abatement and wherever there could be possibilities of taking care of the environment and bringing in more transparency in all these aspects that we are doing. For the society that we live in, we continue to work hard on our CSR initiatives. And basically, instead of just doling out money, we are helping to build self-reliance in some of the societies and wherever we have commercial operations. As we look forward, as we see the current year, while we face the headwinds in FY24, which I just talked of, the current financial year started in a very promising way, with Q1 of FY25 delivering an impressive net profit of 200 crores, a 76% surge over last year. And our EBITDA margins also improved from 12%, which were there in Q1 FY24, to an impressive 20.4% in Q1 of FY25. All three of our businesses are reaping the benefits of this backward integration that we now have established with the ammonia project. And it has helped to mitigate the supply chain risk as well as price volatility, which has remained within the group now. Also, the strategy of moving from commodity to specialty has been also effectively now beginning to deliver results. Overall, the demand outlook for all our three businesses, namely the crop nutrition business, mining chemicals business, and the industrial chemicals business, remain beautifully aligned with the India growth story. We are also hearing, very positive feedbacks from the Indian Meteorological Department, IMD, that they have forecasted an above average rainfall this year. So that will give us a very favorable Kharif as well as Rabi season, which will be a positive for the crop nutrition business. In the mining chemical sector, we anticipate growth in FY25 driven by strong expansion in the country's coal, power and infrastructure segments, again driven by the budget allocations that were also announced. A year beyond the TAN product, our business has demonstrated its capacity to deliver now holistic total cost of operation offering to the mining sector and the end users. And now gradually we are on the path to become a comprehensive mining solutions provider in India rather than just a product supply. So this is going to help us sustain margins and customer loyalty. In the industrial chemicals segment, we have now gradually been moving towards more and more of specialty chemicals with steel grade nitric acid and pharma grade isopropyl alcohol IPA, and they've been, giving a very strong acceptance from the end consumer end. So that is something that is going to be a positive, emerging in our journey from commodity to specialty. I'm happy to share that recently the Director General of Trade Remedies, DGTR, has sent a positive recommendation for an anti-dumping duty on IPA from China. While it's pending the approval of the Finance Ministry, this anti-dumping duty will support a level playing field and fair pricing for IPA for the next 5 years. So now with the national budget and the government's focus on the critical sectors, agriculture, power, mining and infrastructure, all of which will be supporting the company's businesses. Internally, we remain steadfast committed to bringing more and more of operational efficiencies based on newer and better technologies, AI and ML drive. Plus, from a strategic perspective, a very strong move from commodity to specialty or from volume to value. And this we feel will help us navigate not only the market challenges, but build a very strong brand in the years to come and continue adding long-term value to all our shareholders. So before I conclude, I would like to extend my warm, heartfelt thanks to our valued customers, business associates, banks, financial institutions, government, and above all, each one of you, our dear shareholders. I would also like to express my sincere appreciation for the entire DFPCL team for their dedication and hard work right through these challenging times. And of course, a warm thanks to each of my colleagues on the board for their unwavering support, guidance at every juncture of our operations. So my best wishes to all of you and your families. Thank you. I can now request Mr. Deepak Rastogi, CFO and President Finance, to give a little more detailed presentation on the company's operations and financials. Yeah, Deepak.
Thank you, Chairman. Now I will make the presentation on business update. Go to the next slide, please. So here I will talk briefly on the company overview, followed by the results and the project updates and the work which we are currently doing on the CSR side. Go to the next slide, please. So as you are aware that DFPCL actually is a leading chemical and fertilizer producer with 4 decades of proven expertise, handling the mining chemicals business, which is actually the TAN, industrial chemicals, which is the nitric acid, well the IPA business, as well as in the crop protection product, crop nutrition business, which is the CNB business. We overall have 6 manufacturing plants located at Taloja, which is the major site for us, then followed by Dahej, which is on the west side of of the country. Then we have Srikakulam and we have Panipat. Overall, there are new upcoming expansion programs. One which is the brownfield, which is coming in Dahej. The other would be the Gopalpur project, which is in the Odisha. So overall, we have 2,300 plus employees currently with 1.6 billion market cap as on 30th of August. Go to the next slide, please. So we have been actually delivering a lot of value to the customers, and overall from mining chemicals, which is the TAN business for us, we are the only manufacturers for solid TAN, which is the HTAN as well as LTAN. We have also delivering, or we are only producing the medical grade AN, which actually goes into the healthcare sector. And we serve the markets which are in mining as well as infrastructure and healthcare, as I talked about. We continue to be the largest producer in India and in this particular segment. Moving to the industrial chemicals, we are the largest producer of nitric acid with a capacity of close to 1.1 million tons, which is 111 lakhs tons, which includes the DNA as well as CNA. And we also have around 70,000 metric tons for IPA. We have been the pioneer in IPA. We have got all the for IPA we have the pharmacopoeia grade certifications, and we continue to supply to the pharma as well as healthcare sector. For nitric acid, we are actually supplying to nitroaromatics, chemicals, derivatives, and explosive as well. On the crop nutrition side, we actually supply NP and NPK along with bentonite sulfate, with overall capacity of around 1.1 million tons. And overall, we actually have brand these products under Mahadan. We are actually the leading specialty producers and suppliers in the core markets under PropTech, SmartTech, and we have just launched Solutech as well. We offer these products for cash crops, fruits and vegetables, and other agricultural needs. Go to the next slide, please. So overall, as I said, we have been in the leading position in all the business segments where we are playing. So currently we have 40% of market share in the mining chemicals business, which is the TAN business, with an overall revenue size of around 34%. For industrial chemicals, we have 60% market share for CNA, which is concentrated nitric acid. And here again, we are the largest producers of nitric acid. And this particular segment contributes to 21% of the revenue. For the crop nutrition business, the revenue size is close to 44%, and we are the leading player in the specialty and water soluble fertilizers in India. Next. Now, I want to actually spend some time here. So earlier on the left-hand side of the chart, you would see Mahadan, which was erstwhile STL, which is SmartTech and SmartChem, sorry, and which actually was housing the crop nutrition business as well as the mining chemicals business, which is the TAN business. And it had a subsidiary as PCL, which is the ammonia business for us, and platinum blasting business, which is an Australian subsidiary. Now, in the new structure after the demerge, as NCLT has already passed the order, on the right-hand side, Mahadan actually will house the crop nutrition business. DMSL, which is Deepak Mining, would now house the mining chemicals business, and the PCL business, which is the ammonia business as well as the platinum blasting business, would actually move under as a subsidiary under DMSL. Purely from DFPCL perspective, there is no change. It continues to house the industrial chemicals as well as the realty business for us. Now, what is the effect of this and why we wanted to do is, obviously, as you know, that each business has grown its own size, and they had obviously needed definitely their own technologies and strategic partnership. So in the journey of commodity to specialty, this demerger actually would tremendously help all the businesses. Next. So here I would say that for all the businesses, we have been actually moving from just providing products to holistic solutions. And when I say holistic solutions, which means working very closely to the consumers, not just the customer, but the consumers directly, and providing what they actually need. So especially for the mining business, we have been actually providing the products, but on the top of it, we are actually looking to provide them technical services and blasting services in order to reduce the overall losses during blasting, when we do the blasting for the mines as well as for the infrastructure companies. What this does is that it actually reduces the overall cost of operations as well as improves the productivity. Similarly, for industrial chemicals business, we have actually launched industry specific nitric acid, which is for solar as well as steel grade nitric acid under the brand name Pickbride. And similarly for IPA, we have solvents under Purosol, wherein we serve specific pharma grades this thing. And we have also launched the semiconductors for semiconductors, the electronic grade IPA. As the chairman just mentioned, we have got the ADD in favor of us, and obviously in the sense like they have already given the recommendation, DGTR has given the recommendation to DOF. So we see a huge value in this particular product going forward. For crop nutrition, we have already launched crop specific products, and here we actually work very closely with the farmer. Show them, apply our products alongside with in their own field, so that they are able to see the value which we bring on the table and the kind of productivity which we bring, which they can see it versus their own applications versus our applications by way of crop tech as well as smart techs which we supply to them. So currently, we have actually sold close to 300,000 tons of crop tech since our launch. And we have launched for all the cash crops, which is sugarcane, onion, groundnut, cotton, soya bean, and maize. And we also got, obviously, a new arrangement with Haifa, and we will be expanding the specialty, basket going forward. Good. Next slide, please. So, the key highlights which happened, during the 24, which is for the financial year. First of all, we actually launched or we commissioned 500,000 tons of capacity of ammonia as part of the backward integration. We have invested close to 4,500 crores here. And this particular project is actually eligible for the ultra mega benefits, which will bring back 4,000 crores, over a period of 20 years. We also have a tie-up with Equinor, especially on the gas side. So we already have a tie-up currently until May 26. And from May 26 onwards for the next 15 years, we would have continuous supply of natural gas, which will actually make sure that we are able to take care of the variability of the supplies. We got the reaffirmation from ICRA as well as CRISIL for the long term as well as short term ratings. CRISIL is only short term, and we have got the highest ratings. However, ICRA has reaffirmed the ratings. There are no promoters pledged right now as on 31st of March. So there are no encumbrances of any kind on the holdings, promoters holding. And the board has actually recommended a dividend of around 8.5%, 8.5 rupees per equity, which is 85%. Next. So, coming back to what has happened during the year, we had challenges together for all the businesses, wherein we had erected cranes for crop nutrition business, a very low water table, and for the TAN as well as for industrial chemicals, we had actually huge amount of imports coming in from China as well as Russia, which impacted at least 2 quarters. But the things are basically was a aberration, short-term aberration, and we are seeing obviously a stabilization there. We also took a one-time charge for subsidy as well as a ramping cost, totaling to around 355 crores. Next. So here, this is a chart which actually shows the evaluation of on the left-hand side on the revenue. On the right-hand side, it is operating EBITDA. And have you rightly see that on the left-hand side, we delivered 8,700 crores worth of revenues. 23 looks to be higher because the commodity prices were quite high, even though the quantity was very similar this year as well. But on the right-hand side, if we were to actually take the impact of one time, then we have delivered 15% of EBITDA. But without that, we have actually delivered 18%, which is actually in line or better than any of the earlier years. Now, 22-23 had been a positive aberration, and we are thinking that those years would be very, we may not be able to sustain that kind of performance on every year basis, but obviously there could be few years like that. Next. So this actually gives us the proper, chart in terms of revenue as well as operating EBITDA. But I wanted to share two things. One is that as far as the EPS is concerned, you would see it's around 35 rupees this year. But this is into taking into account the one-time charges. If we were to back that out, the EPS delivered actually is going to be 64 rupees, which is actually higher than any other years. Net debt versus equity is slightly up because of the new projects which we are currently investing on. So the message is that we have been doing, in spite of the challenges, this year has been quite a good year for us. And if we can sustain this kind of performance, we can definitely better when the years when there are lesser challenges for us as a business. Next. So this year had been very, very good. For Q1, performance have been very robust, and we delivered 200 crores worth of EBITDA, which was around 76% up. Similarly, the margins were up from to 20%, from earlier 12% quarter on quarter. Next, please. So we have been undertaking these two projects. One is the brownfield project, in Dahej, which is the nitric acid plant, wherein the COD would start sometimes in H2 of financial year 26, with a capacity of 450,000 per annum, including the WNA as well as CNA. And we have a greenfield Gopalpur plant for our mining business, wherein the COD would again be on the next financial year, H2 of next financial year. And we would, obviously, it will be closer to the east side. So hence, we would have larger customers to serve, from there at a cost competitive basis. Next. So this is how the capitalization on the left, topmost left of the chart, the overall market cap has been continuously improving for us. And for the last 5 years, the market cap has actually grown by almost 94%. We see huge interest from DIIs and FIIs, and we can see increase in those numbers in terms of overall shareholding pattern. Next, please. So in summary, the key takeaway is that, we continue to front end our, expenditure as far as the Capex is concerned. We continue to have a leadership position, in all the businesses where we operate. We continue to have our, focus on accelerating our commodity to specialty, and the demerger would only accelerate these things. And we would continue to have transparency and sustainability within ESG. With huge strides which we are taking on digitization, we are getting the organization future ready. Next. So these are the some of the awards which the company has actually received during the last 1 year across all the operational excellence and CSR and everywhere. Next, please. And with the community, inclusive community, and the society where we are in, to serve them better, we have continued our focus on through Shania Foundation on skill development, employability, entrepreneurship, and improving health with various projects which we currently operate at the locations where we are actually present from a manufacturing perspective. So thank you so much, and I hand over to the chairman for further proceedings. Thank you so much.
Thank you, Deepak. So as the notice has already been circulated